$670 million in crypto positions just got liquidated because a bill most investors never read hit a wall in the United States Senate. On Monday, we told you the crypto rulebook had 1 week to pass and to know the dates. The market just learned them the expensive way. The Clarity Act stalled, the odds of it passing this session crashed to 37%, and the deadline is 5 days away. Here's what actually happens next. Here's the timeline. Quick rewind for anyone who missed Monday. The Clarity Act is the closest America has ever come to answering the oldest question in crypto. Which government agency actually governs which digital asset? A decade of billion-dollar companies operating under rules written before the internet. And the answer was finally scheduled for a vote this week, before the Senate leaves for recess around August 10th. It did not get the vote. Here's the shape of it: the stall, the cascade, and the countdown. First, the stall. The bill that had momentum last week got shelved this week. No dramatic floor fight, no viral speech, just the quiet Senate arithmetic of a packed calendar, competing priorities, and a recess clock. Prediction markets, where real money bets on outcomes, watched the schedule slip and repriced brutally. The odds of the Clarity Act passing before recess collapsed to around 37%. Not zero, but a coin flip that lost its edge. And here is the structural point we keep returning to. For crypto, no answer is an answer. Every month without rules is a month. Institutional money stays cautious. American exchanges list conservatively, and builders incorporate somewhere else. The industry that spent a decade begging for regulation just watched it slip again, possibly to the fall, possibly further. Second, the cascade. The market's response was mechanical and merciless. Roughly $670 million in leveraged positions, longs betting the bill would lift prices, got liquidated as Bitcoin, Ethereum, and XRP slid together. If you have never watched a liquidation cascade, a price dip forces leveraged traders to sell. Their selling deepens the dip, which forces the next layer to sell, an avalanche where each snowball triggers a bigger one. Understand what actually broke here. It wasn't the technology, it wasn't adoption. It was a bet on a Senate calendar made with borrowed money. The traders who got wiped out weren't wrong about crypto. They were wrong about Congress with 10 times leverage. There's a lesson in that sentence, and it's cheaper to learn it from this episode than from an exchange notification. Third, the countdown, 5 days. If the Senate somehow moves before recess, the whiplash reverses just as violently. 37% odds means 63% of the market is now positioned for failure, and a surprise passage would force all of that to reprice upward in hours. If recess arrives with no vote, the bill waits for autumn, and crypto spends another quarter in the vacuum, with fear already at multi-day lows and the market's most reliable catalyst postponed. Meanwhile, the backdrop we have tracked all week holds. Bitcoin in the low 60,000s. Sentiment stuck in fear, and the quiet accumulation we covered Monday, sailors' re-engagement, corporate wallets holding still running underneath. The surface fear and the underground accumulation are both real. Weeks like this decide which one was right. What this means for your money, not advice, structure. 3 things. First, if this week hurt you, the problem was probably not your thesis. It was leverage on a political timeline. Politics does not move on chart patterns. If you hold crypto because of what it might become over years, a Senate scheduling decision changes almost nothing. If you were levered to what Congress does this week, you were not investing, you were betting on parliamentary procedure. Second, mark August 10th on your calendar, then mark this fall. Postponed is not dead. The Clarity Act remains the single most powerful scheduled catalyst this market has in either direction. The trade everyone regrets is the one made the day before the surprise vote. Third, watch what doesn't sell. In every forced liquidation, coins move from leveraged hands to patient ones. The wallets that accumulate through this week's cascade are telling you what the smart, slow money thinks the fall vote brings. On-chain, that data is public. We will keep reading it for you. Nothing here is financial advice. It's the map. Your money, your call. Today's question, after the stall, what is the crypto market actually waiting for? Blue pill, the rules were always coming this fall instead of this week. The liquidations flushed the gamblers, the accumulators kept stacking, and the delay is a discount window. Red pill, the window is closing. Every delay proves crypto's fate rests with a committee calendar, and a market that needs Washington's permission slip was never the revolution it claimed to be. Blue or red below, and tell me, would you buy a coin flip at 37%? Today at noon Eastern, 9:30 tonight in India, the TCS layoffs special, what AI is really doing to India's safest job. If you have family in IT, watch it with them. Macro at 7, crypto at 9, AI at 11. Every morning Eastern, we watch the forces. You keep the decision. The timeline keeps moving. We will see you in the next one.